All right, stock and option traders, you know what time it is. It's time to look at the charts. Now, if you're a trader, specifically an options trader, you know in order to make money in the long run trading options, you have to know which way the stock is going to move or not going to move. How do you do that? You look at the stock charts. So as we do every week, almost every week here, I show you my charts. I show you what I'm seeing in the markets. We look at individual stocks. We look at indexes. I show you my setups and I show you what I'm seeing for these specific stocks moving into the future. And what we've seen in the past, I can help you decide which way the stock may or may not move. If you want to have longevity in the markets, you have to know which way the stock is going to move. And you can only do that by looking at the stock charts. Yes, you can look at all the fundamental data. You can look at the sales and earnings and revenue and growth and all that. That's fine and all, but it doesn't tell you which way the stock is moving. All that information gets factored into the price charts. So if you want to become a better trader, you have to look at the stock chart. So I make these free videos for the trading community, try to help everybody out. So what we're going to do here over the next, 25, 30 minutes is look at charts and get a gauge on which way we think they're going to move. And then you place your option trades. You don't place your option trades before you look at the stock charts. How can you put an option trade on without knowing what the stock is doing? You can't. So you got to look at the stock charts first. All right. So let's just jump in like we typically do. Okay, everyone, Lee Lowell here from smartoptionseller.com. I'm here to help you become a better trader by looking at the stock charts. So let's just jump right in as we typically do and start looking at the charts. We always want to look at the indexes first, specifically the S&P 500, because that's what is the best gauge of the overall market. So what you're seeing in front of you is the charts that I use. Up here is the price action. Down here is the RSI indicator. I want to go over, what I put on my charts because I get emails every week. People asking me, Lee, how do you set up your charts? What do you use? What indicators do you use? Moving averages and all that. So for those that are new here, let me quickly go over this. Up here is the price action. As I said, I look at daily charts because we're more longer term traders. We're not hyperactive traders. We're not day traders. We're not intraday traders. We're not trading off of 1 minute charts. That's not what we do. We want to look for the long term. In the long run, the market goes up over time. So we slant bullish. All of our trades here at the Smart Option Seller is selling naked puts and selling put option credit spreads. Those are bullish trades. We have a couple months expiration period because we want to give the market and stocks time to move up, which they generally do over the long run. So we look at daily charts. Each one of these lines here is 1 day's worth of trading. These are open, high, low, close bars. These are not candlestick charts. And up here, I have 3 moving averages. That's all that I use. I use a 20, 50, and 200-day moving averages, all simple, not exponential. And you got a blue line here, you got a red line here, and the green line here. Those are the 20, 50, and 200-day moving averages. And these other blue lines that you see are the channels that I draw. These are hand-drawn. These are manually drawn, just to give you an idea of which way a stock or index is trending. You want to go with the trend. Stick with the trend, play with the trend. If the trend is up, then you want to take bullish strategies. If the trend is down, then you want to take bearish strategies. And how do you tell the trend? By drawing these lines. You connect some of the tops, you connect some of the bottoms. That forms the channel. The channel tells you the trend. It's just an easy visual way to see which way a market is going. And you want to play along with that trend. Even if you think a stock or index has hit highs, it doesn't mean that it can't keep going higher. All right, so you want to stick with the trend. Down here is the RSI indicator that I use. It's an overbought, oversold oscillator. It oscillates from overbought to oversold within the range of the 80 level and the 20 level. You can change those to whatever you like. I use the 80 and 20 level, and the RSI is a 14-day look back period. Okay, that's it. Keep the charts simple. All you have to do is pretty much look for the trends, see how it's moving in the channel. You buy in the dips, you sell on the tops, and you can get in and out over the course of a couple months. That's how we do it at the Smart Option Seller. So let's look at, this is a chart, a daily chart of the SPY, the SPY, which is the exchange traded fund for the S&P 500. If you want to know the symbol, just look up here in the top left corner. So we know since last October 2023, the market in general has been in a nice, beautiful uptrend. I'm not saying that every individual stock has been following that pattern because they haven't. Some have gone ballistic and some have either even gone down or just moved sideways. But the general market has been moving higher. So let's just see what's been happening. Last 2 weeks or so, we've had, still moving upwards, but more a little bit of sideways action. What you want to do in a strongly uptrending market like this that we've seen will typically bounce off the 20-day moving average, which is the blue line here. You can kind of see it here, and we're at the bottom edge of the channel that I've drawn. So we're coming upon support right here. This has been the market. This is where we closed Friday, March 15, 2024, right on the bottom edge of the 20-day moving average and sort of coming to the bottom edge of the channel. Okay, you can see the channel here. So we're sort of at an inflection point for the markets. Do we think the market is going to bounce again off the 20-day moving average and the bottom of the channel and then start to move higher again? Or have we caught some weakness here, and is it going to come down to the next level of support, which is the 50-day moving average? Another way that you can tell a strongly trending market is by the slope of the moving averages. All the moving averages that I track, the 20, 50, and 200-day, you can see they're all sloping upwards. That means a market is in a very strong directional move, which is up right now, because they're all sloping upwards. Yes, the market has just been going up since last October. Is there a need for a huge pullback? Is there a need for a bear market to show up? In my opinion, no. Why would there all of a sudden be some disastrous, catastrophic bear market lurking out there? Why would that happen? So many people think that we can't go higher anymore. The market can't go up anymore. There has to be some kind of bear market. Why? The only reason why there's going to be a bear market is some catastrophic event like another pandemic or a major world war or something. We know interest rates are high around the world. That's been going on for a long time now. The markets have been able to adapt to that. Companies that sell products that people buy have been able to adapt for that. The reason why stocks move in a certain way that they do is not because these are just blips on the screen. It's because these are real companies in the stock market that make products that people buy, and their revenues and sales and earnings keep growing quarter after quarter. That's why the stock market goes up, because the indexes are made up of all these great companies. Okay, so there's so many people that are doom and gloom and always think that there's a bear market lurking around the corner. It's not always the case. The market goes up over time. So go along with that philosophy. Yes, we will have pullbacks. There is always going to be pullbacks. Some are going to be larger than others. Look at this pullback right here. That was larger than this little pullback right here. Okay, but eventually the market will go up again. So if you're a bull, think long term. Okay, in our newsletters, we're shorter term. We're like 2 or 3 months out in the future, which I think gives us enough time to get on a nice little trend here. We wait for a pullback within the uptrend, and then we get on board from there. So where are we right now? As I said, we're sort of at an inflection point. Is the market going to bounce off the 20-day moving average and keep going higher? Or is it going to pull back to the 50-day moving average because there's just a little bit more selling coming in right now? The market's gone up pretty good for a long period of time. So maybe we need that pullback, just, a pullback that is healthy for the market. Just because, just because the market's going up doesn't mean that we can't have another pullback. Sure, we can have another pullback. A pullback would be nice to see because it would allow us to get in at cheaper levels. But in the long run, I think the market is going to go up. Maybe we'll have a pullback. So this is the S&P 500, very strong. Let's look at the Nasdaq, represented by the triple Qs. This is the QQQ. Okay, you can see also since last October, just moving up nicely. And as I said, a strongly trending market will hug along the 20-day moving average. When it starts to have a little bit of a pullback, you're going to use that 50-day moving average as the next line of support. So you can see the triple Qs has fallen below the 20-day moving average. It fell below here as well, fell below here and here, but it kept moving up. So are we going to see selling next week to bring it down to the 50-day moving average? We don't know yet. Both of the last few times that it's popped down through the 20-day moving average, it just popped right back up again. You can see it every time. So will it happen again here, or will it keep having some selling next week to engage with the 50-day moving average? We don't know yet. But what do? You can wait. You can sit on the sidelines, wait to see what the next couple days bring. If the market curls up and starts going higher again, then you know the next leg of this bull market has probably started. And that way you can get into what I call your higher probability setups. If you want to get long this market as a bull, you wait for that that move up the next couple of days. If it starts to move higher again, then you can get on board with your bullish trades. That's what we do when we look for our trades in the smart option seller. So let's quickly go to our website real quick. I just want to show you what we do here at the smart option seller. As I said, we're all about selling put options and selling put option credit spreads. That's how we get on board with the bullish trades. If you want to learn a little bit more about what put selling is, go to our website, smartoptionseller.com, click on the free ebook, and you can learn free. You can put in your name and email address here. We'll send you an email with a link to download the free Put Selling Basics ebook. If you want to get a little bit more information, we're once again holding our Put Selling Intensive webinar. This is a deep dive into the put selling strategy. So click on the link here if you want to get more information about that. And then our other stuff right here, our services tab. We got our newsletters, we have our coaching sessions, we have our video series, and our calculator that we sell. All right, so that's a little bit more about what we do. Let's jump back to the charts here. So basically, triple Qs moving up nicely, having that little pullback. Will it keep pulling back, or is this just a little bit of a selling and then we wait, or if we'll see the buying come back in again? So we're sort of in a holding pattern right here. We want to see if the market starts to turn up again. That's our high probability trade to get in. Let's look at the Dow Industrials represented by the DIA. That's called the diamonds. DIA is a symbol right here. You can see the same thing from last October. So we've got a little bit of sideways action here on the Dow. It's been popping up and down, hovering around the 20-day moving average. That 50 days getting a little closer here, so maybe we'll have a little more selling and it'll connect with the 50-day moving average and then curl up and move higher. There really is no reason for a huge bear market to happen. Pullbacks are healthy and necessary. Okay, there's in my opinion, we know interest rates are high. We know these skirmishes out in the Middle East are happening. We know that Russia and Ukraine are still happening. The stuff that's going on in Israel and Palestine, we know what's happening. Are those things going to derail the U.S. stock markets? I don't think so. They may be a little blip here and there to have a pullback. What happens in the U.S. stock market is all based on what the U.S. stocks companies are doing within the stock market. Okay, if they're still making great products and people are still paying for those great products and those companies' sales and earnings keep going up, the stock prices have to go up. On a day-to-day basis, it's so random. It's really hard to be an intraday trader unless you have a really good system. We don't trade intraday, but I'm talking in the longer run. As long as these companies keep making money and keep making products, the market is going to go up in the long run. Here's a longer term chart of the Dow Industrials. It just keeps going up. There's no other reason for it not to in the long run. In the short run, it's very random. Okay, so we're bullish over the long haul. And then for our shorter term trades that we make, 2 to 3 months duration, we wait for the pullbacks to get in on that next bullish wave. All right, let's start to look at some individual stocks and see what we can do here. Now we're going to focus on more of the mainstream, really popular stocks that people have a huge interest in, because these are the ones that are, people will call sexy. They garner a lot of interest. So we look at those first. The first one we start at is SMCI. Symbols up here, super microcomputer, because I still get so many emails about this stock, this company. Look at this chart. Started at $300 a share, was hovering in the high 200s, 300s. And then in January, it just exploded higher. This whole thing about artificial intelligence, AI, all these companies that are being involved in that category have just gone ballistic. So SMCI, just look at this thing. So people want to know, how do I get in? Should I get in? Where do I get in? It's definitely a strong stock for sure. And you can see, as I said, strongly trending stocks will follow along the 20-day moving average. So you had some quick opportunities. You have to be fast with stocks like this, because once it has that pullback, it jumps again because everyone wants to get on board. It's a very expensive stock. It's hard to trade. Had the pullback here, had the pullback around here, and now it jumped again. So Will we get a little bit more of a pullback to meet up with the 20-day moving average? Hard to say. Some people like to try to front run this thing and get in before it pulls all the way back. So it's a very volatile stock, very expensive. So be careful if you're trying to play this stock. How do you get in? Well, you can buy one share, it costs you, almost $1,100. Or you can trade some options, but that's up to you on how to play. Let me just bring up our option chain here and see what some of these options are trading for. Now, this is the option chain from Interactive Brokers. It's a broker that I use. If you want to get some information about Interactive Brokers, in the links below in the description here of the video, I've got a link for Interactive Brokers. But here's the option chain that I use. Got put options on the right. Now, we sell put options on stocks that we're bullish on, but we don't sell put options on $1,100 share stocks. Okay, we use stocks that are a lot cheaper because if you're going to get assigned, when you sell a put option, you could be assigned shares of stock, meaning you have to buy 100 shares of that stock at a specific strike price and pay for those shares. We're not interested in buying $1,100 share stocks. But if SMCI is a company that you're interested in selling put options on, let me just show you some of the amazing and crazy prices that people are paying for these things. So here's the March 22, 2024 options that expire this coming Friday. Okay, March 22nd is Friday. Now, SMCI trading at 1,078 right here. Here's the last price of the stock. If you're potentially interested in buying 100 shares of SMCI, but at a much cheaper price, you can sell a put option. That's what selling put options is all about. And you can potentially put yourself on the hook to buy shares of that company at a price of your choosing. Now, if $1,100 or $1,078 is too expensive for you, you can sell a put option at a strike price a lot cheaper. Now, let's just say, $700 is a level that you'd be okay potentially buying 100 shares of SMCI. That would still require a $70,000 outlay if you have to buy those shares. But with SMCI at 1,078, what are the chances of it falling all the way down to 700 by this coming Friday? That's almost a $400 share drop. Is it possible? Sure, anything's possible. Is it likely? Probably not with all the bullishness around SMCI. So if you were to sell a 700 strike put option, you can get somewhere between 55 and 90 cents per contract, which is actually $55 to $90 in actual dollars. So if you sell one of these contracts, you can get maybe, let's say 70 cents per contract, which is 70 actual dollars someone will pay you for your obligation to buy 100 shares at $700. So if that's something that you want to do, if you're interested in potentially buying SMCI at $700, someone will pay you $70 for your obligation. And now if SMCI doesn't come down to $700 by Friday, you keep your $70, but you don't get to buy the shares at all. And you just move on to the next trade. Now, let's just move out. Let's see what these things are paying. Let's go out to June 2024 and see how much these options are paying. These put options are paying that you can sell for. Now, if $700 is too expensive for you, let's go down to 500 strike, meaning you'll obligate yourself to buy 100 shares of SMCI at $500. Well, in this case, you could probably get $9 per contract, which is $900. Someone will pay you $900 while the market is open. Let's just say, here's the bid and ask. So that's $9 per contract, which is 900 actual dollars. You'll get $900 for your obligation to buy 100 shares of SMCI at $500 a share. That's over half of its value it has to lose by June in 96 days. Is that a possibility? Can SMCI fall or lose more than half of its value by June? And it could, but if you're still thinking $500 would be a great price to buy this thing, I'm willing to take $900 from somebody, and then I'll be on the hook until June to buy 100 shares. Now, if you go back to the chart, here's $500 all the way down here. Here's where it is now. Can it fall down to 500 by June? Nobody knows, but you're willing to take that chance because you think SMCI at $500 would be a good investment for the long run. So that's what put selling all about. So let's go back to the charts here. So SMCI, it's in a huge uptrend. Will it pull back to the 20-day moving average? We don't know yet. But if it does, that could be the next potential you know, blast off point for the next leg higher. So keep an eye on SMCI. Let's look at NVIDIA. We're looking at these more popular stocks because these are the ones that have really been driving the market higher. NVIDIA also just had this nice move up. We drew this line a while ago here. It couldn't get through this area for a bit, and then it popped through. You can see the 20-day, 50-day, 200-day moving averages all moving higher. That means that stock's in a very strong uptrend, pulling back a little bit. Will it pull back to meet the 20-day moving average? So what happens is when a stock starts pulling back, you see the price action coming down, and you see the moving averages start to move up. So there, at some point, they will connect, and that could be the potential next blast off point for the next leg higher if the stocks continue to move higher. You always want to wait for that higher probability setup. If you're looking to get long, you want to wait for some sort of pullback that could potentially meet one of the moving averages that are still upsloping. That means the market is still, or stock is still in an uptrend, okay? You can see it had gotten a little bit overbought here on the RSI. Right here, this is the area that it portrays in the price action. So even though a stock is overbought, doesn't mean that it's going to drop in price right then and there. You can see here it was overbought, but look, the stock kept going up high, a couple $100 shares higher while it was already overbought. And now it's overbought again, and it's starting to come down. So this little pullback here is represented by here. So just because a stock is overbought doesn't mean that it's going to drop right away. It was overbought when it was trading around $600 a share, and it ran up another $300 higher. So if you were trying to get short here, buying put options or selling the share short, you would have gotten burned pretty bad. So you really want to wait until the RSI starts coming down below the overbought area, which was right around here. So you would have had maybe 2 days to be correct on your bear move, and then it took off again. So you got to be careful with these very high priced, very popular stocks. That's NVIDIA. Let's look at Costco. All these stocks just been moving higher. Costco has this nice move up, but look at this nice little pullback here. It popped down below the 20-day, and now it was trying to make its move to the 50-day moving average. So we got some good sellback here, pullback, and then it's hovering above the 50-day moving average. So I think if the rest of the market starts to go up again, Costco's probably going to go along with it. Got pretty overbought. You can see right here, overbought. Had the nice pullback. So this could be a potential entry for bulls that are looking to get long Costco. Keep an eye on Costco. Let's look at Meta, the old Facebook, same thing. It's just sitting right on the 20-day moving average, just blasted higher. This is your area potential of higher probability setup. Maybe you wait a day or two to see if it pops back up again. That could be the beginning of the next leg higher. Or maybe it's going to sell off with the rest of the market if the rest of the market sells off and comes down to the 50-day moving average. So here's your higher probability area. Maybe you wait a day or two just to see if it curls back higher. Yes, you won't be able to buy the bottom here, but you'll be able to get in on that next leg higher and run with that thing, okay? So you want to look at these higher probability setups. What else is going on? Some of these other big stocks. Let's run through our list here. Tesla. Let's talk about Tesla because, I've been not so hot on Tesla. It's definitely in a downtrend. The moving averages are kind of all jumbled up, but look, it's popped below the bottom edge of this channel here. So Tesla does not look so good here. It's had some good selling. Will it find a bottom? The last line of support, you can always look back on the chart to see where it had last support. So this 160 level had some movement here, had some movement here. So maybe around 160 is the area of support that Tesla might start to rally again. It's popped down through the bottom edge of the channel. The RSI is getting not completely oversold, but it's getting low here. So maybe Tesla will kind of just move a little sideways here, see if the bottom feeders start to come out. But Tesla, it's a tough one right now. I'm a bull long term, for the market. I'm not a bull for Tesla. So if I was to play Tesla, I probably would just stay away. It's just not, the chart's just not looking good for me. All right. So that's my assessment on Tesla. What else? Netflix. We'll look at a couple of others. Netflix, just chugging along here, chugging along the 20-day moving average. kind of hovering around the 20-day moving average. If we get a little more selling this week, see how it interacts with the 20-day. If the market starts to move up again, you know this thing's going to go higher as well. Amazon, same thing, got the 20-day moving average, hugging along the 20-day moving average. As I said, if the market starts to move up next week, it's going to bounce from here. If the market comes off, look for the 50-day moving average as the next line of support. So you want to keep an eye on these. Google found support on the 200-day moving average right here, so it came down pretty good. So the 200-day moving average is really that last line of support. You'll typically find quality stocks, if they come down to the 20-day moving average, they're going to bounce. So Google bounced off the 20-day moving average here. Let's look at, here, let's go back to the list here. Let me see if there's, Apple we want to talk about. Apple, a favorite of most people. Apple really has been taking a beating. It has not been going up with the rest of those high flyers. Moving down here, has fallen below all the moving averages. And you can see the moving averages, this is the 50-day, here's the 20-day. Those are sloping down. The 200-day is starting to flatten out. So Apple is a little weak here, okay? It's going to take a bit more work for it to start to move higher again. At the moment, Apple is weak to sideways action. Here is that that prior support right around 170, so it's hovering around there. Apple, I'm not a bull yet. I'm a bull for the long run, but in terms of if I wanted to get in now, I would have to wait to see until Apple really starts to move higher again. It's in a downtrend. Okay, it's going to be harder for the bulls to take control here just because it's been moving lower. So Apple is not a buy yet for me here. If you want to nibble on some shares, if you want to try to pick a bottom, you can nibble on some shares, but it is not in this type of uptrend where you can see this is nicely right here. It's in a downtrend, so it's going to be harder for the bulls to get going on Apple. So just keep an eye on that. Let's see what else. Disney finally powered above its, it had that support right around $80 and it's kind of hovering right here around the 20-day moving average. So I think Disney now has maybe turned things around and probably going to see that move higher in the long run. Let's see what else. We have a put sell on Bristol Myers. It's kind of chugging around the lows. Finally got its groove together, started to move up, but now it's coming back down to the 20-day moving average right here. So we want to see a bounce in Bristol Myers. What else? PayPal, nothing going on with PayPal here. Let's see, we drew this congestion pattern, which we knew when you have a congestion pattern, it's going to blast out one way or the other. It started to move down, but now it's moving higher. I think PayPal is just still going to kind of chug along sideways. Nothing really happening there for me. McDonald's, look, big move lower. For right now, McDonald's is out for me. I have no opinion on McDonald's. If I had to make a call, if there was a gun put to my head, I'd have to say, it's going to either move sideways or maybe a little bit lower. But McDonald's needs to consolidate a little bit before the next leg higher, if it does move higher. Warren Buffett, you can get in on his Berkshire Hathaway fund, piggyback, the greatest investor of all time. It's been hugging around the 20-day moving average, just trying to store up its energy for that next leg higher. So if you want to piggyback Warren Buffett, you can take a look at his Berkshire Hathaway fund. Let's see what else. What else? Coca-Cola moving sideways. Adobe took a beating, had some bad earnings. Well, the earnings were not that bad actually, but the market was not impressed with its outlook for the future. So it's come down quite a bit. Had this huge gap down $70, $80 a share. That's tough for Adobe at the moment. Pepsi, that's about it. So Pepsi moving sideways. So there you go. You want to look at the charts. You got to use the charts as your gauge. You got to see which way the stocks are moving, which way they potentially may be moving. See how they interact with the moving averages. These are things that are going to help you increase your profitability as an options trader. You have to look at the charts. There's no other way. So I hope this video has been helpful. Give me a like, give me a thumbs up, leave me a comment, send me an email. Don't forget to subscribe. hit that red subscribe button. Once again, down in the description below, I've got links for books and videos and other websites that may be helpful to you. On the screen here, I'm going to put some other videos that you can watch as well that can help you become a better options trader. I do these videos free for the community. I want everyone to be successful. All right, so make sure you check your charts. Get ready for next week. I hope everyone has a great trading week ahead, and I'll see you next time. This is Lee Lowell signing off.